Hi guys, welcome to my screencast. Today I will be talking about internal controls of petty cash. What is petty cash? Petty cash is a small amount of cash kept on hand for minor expenses. For instance, coffees and teas for meetings, hostages for small mailing, and purchases for office supplies. Company uses petty cash to avoid journal entries for small spendings. Another reason can also be checks that are invalid and not accepted. Petty cash amounts are decided by companies. It can be ranged from $20 to $100 or even up to $500, depends on the company. The process of petty cash is divided into three, which is establishing the fund, making payment from the fund, and replenishing the fund. Establishing the fund. The company issues the petty cash by writing a check for the amount of fund. The check will then be taken by a custodian, which is responsible for cashing the check. For instance, on 3rd of September, V's company cashed $300 to establish petty cash. We then have to record in journal entry, which in the example, we debit $300 of petty cash and credit $300 of cash. After the fund is established, the cash can be used now. The payments are usually made in two methods. Firstly, employees make payment by using the cash taken from petty cash. And secondly, employees uses their personal cash to pay, which can be reimbursed from the fund. The custodian duty must collect all receipts. However, journal entries are not made due to the payment from petty cash. It is only recorded when petty cash is replenished. The custodian reconciles all the receipts and gives the information to the accountant. The accountant takes the information and replenish the fund. Firstly, the information will be reported. For an example, B's company has a petty cash of $300 with the remaining of $100. We found that $200 will be fully replenished. After reporting, the information will be recorded in journal entry below. So, what is cash over and short? This happens when petty cash fund is replenished and the amount of cash for replenishment is not equal to total receipts. Thus, a temporary account called cash over and short will either debit or credit to balance the situation. For this example, there's a shortage of $10. So we debit cash over and short $10.